Welcome to the National Credit Awareness and Resolution Association podcast at ncara.org, NCARA.org, your source for navigating debt repayment challenges during tough economic times. Today we'll explore how small business owners can more effectively use Creditor Tools. This is an introduction to the Creditor Tools podcast. NCARA aims to bridge the gap between debtors and creditors as a paradigm shift allows debtors to propose their own repayment solutions. We'll share insider tips to help you leverage this knowledge and strengthen your position. Let's get started. Gain an inside awareness of credit risk tools used by creditors. Building a bridge between debtor and creditor with the right tools. As far as a personal introduction, my name is Jerry Staker, and I have a lot of experience. I started my commercial banking career during recessionary periods back in the early 1980s, working on the front lines primarily in commercial loan workouts. I fought just as hard for the borrower as I did the creditors I worked for, and I was very successful in bridging both the borrower and the creditor together for optimal success. The career climaxed in 2009 at the time of the Great Recession, with 12 more years as a commissioned bank examiner at the Federal Reserve Bank of San Francisco. Frankly, I've been there and done that. From the big banks on Wall Street in New York City to Honolulu, Hawaii, I know what I'm talking about. I also know what's coming, a debt crisis. I know what will be needed for you, the small business owner, and I'm talking about a business with annual sales revenues under $10 million. I truly care about you, as you'll find most creditors care about themselves before they care about you. And for the most part, nobody else out there is even talking to you unless they're in it too for themselves. Just look at how they make money. Many, if not most of you, could use some inside baseball tips on how the creditor views credit risk in the administration of problem loans during an economic downturn. That's why I created the 36 Credit Risk Memos, or CRMs, or Creditor Tools for you to use. The CRMs will help you see and understand what the credit tools are and the purposes they serve by the creditor. Best of all, at the end of each CRM, there's a section that addresses the why these tools are important for you. The 36 CRMs are divided into 6 sections and a number of subsections. The first section is called Obligor, where I discuss things like the borrowing cause, the borrowing entity, even includes things like bankruptcy or abundance of caution for you, the obligor. The next section is called Credit Facilities, where we talk all things like interest accrual, loan structuring, the pricing, which is the interest rate and the fees, the repayment sources, the credit approval memo, and the creditor's industry and business risk analysis, and also about the management of the borrowing entity as well. The next section is creditor protection. Things like this include the appraisals, evaluations, or validations as well, the collateral for loans, the loan covenants, the environmental risk, and using guarantors, and even insurance. The next section is financial analysis. This is important. It talks all about cash flow and global cash flow and pro forma cash flow. Things like contingent liabilities, the financial analysis that banks do, what happens when the financial statements are stale or they need interim financial statements, the financial requirements, and also all about financial ratios and how banks use them. The next section is called management, and this has to deal with things at the lending institution and things that they do, like, for example, their annual term loan reviews or just loan documentation. And in those cases where they have to use other remedies like foreclosure and inspections or site visits. It talks all about loan to value. And it talks about other real estate owned, the properties that they take back into their portfolios through foreclosure. There's another area on problem loans and refinance risk and things like renewals and modifications. There's also an area for restructured loans and how a lender will risk grade or rate, give a risk rating for the loans. Essential tools that a small business owner needs to understand. And then finally, there is another section for loan types, so you can familiarize yourself with the broader landscape, the different types of loans. In fact, there's 18 loan types that are identified in here. So as you become familiar with these tools, you should be able to capture in your mind why and what the creditor is thinking, and then be in a stronger position to respond as pressures build. They build up during an economic downturn. You can use the 36 credit risk tools to your advantage because you understand what's going on, and maybe even to your survival. After all, there will be a debt crisis, and you and the creditor will both be looking for fast, effective, and the right repayment solutions. Ultimately, there will be a paradigm shift from the creditor crafting up repayment solutions for you, the borrower. You'll soon be doing that role yourself and bring those recommendations to the creditor. Due to the overwhelming volume of problem loans in seasons of default and restructuring, the borrower will become responsible to develop its own repayment solutions. The better prepared you are, the better chance you'll have to survive. The jaws of justice in each promissory note and loan agreements are powerful and can be crushing. But creditors and debtors must do the right thing, work closely together, maximize results, and minimize losses. Both stakeholders need to stay in business. Both sides are dependent upon each other. The 36 CRM or credit risk management tools will help in building a strong bridge between debtor and creditor. Both have a lot to learn, so let's get building. But first, as a reminder, the CRMs are select topics to enable you to gain an inside awareness of credit risk in the eyes of the creditor, followed by importance to you statements so you understand why these tools are important. These statements offer careful insights for you to use in developing your own repayment solutions during a serious economic downturn. Now, key public sources used throughout this podcast and these credit risk memos include information that's publicly available from sources, namely the Commercial Bank Examination Manual from the Federal Reserve Board and the RMS Manual of Examination Policies, Section 3.2 Loans of the FDIC. Thank you for joining us. Today we've covered an introduction to using creditor tools during times of an economic downturn as debtors prepare to propose their own repayment solutions. We want to hear from you too. Share your own credit risk memo and debt repayment experiences, questions, and recommendations with us at ncara.org, ncara.org. If you found today's episode helpful, please subscribe for notifications of future podcasts. Your feedback helps small businesses also stay in business. Until next time, step forward and take responsibility for your own repayment solutions. Thanks again.